What's happening, my people? What's going on? Welcome to the Exam Breakdown. I'm D. Kumar. It is a pleasure to be hanging with you on this Wednesday, April 2nd, 2025. Man, it's already April. Like, where did all of the year go so far? It's like moving so fast. Things are moving like at warp speed for me. And it's exciting. I just wish I could pump the brakes sometimes and slow it down a little bit. It just seems like fast. Today is exam breakdown for the mortgage loan originators. I get into a little bit of content for y'all to see if I can help you get through this examination. It is my goal and the object of our channel to help folks understand anything real estate. And right now we're focusing on examination prep so we can get folks over the hump to get them licensed and so that they can be off to the races. And amongst you lives the top producers, the future top producers for the industries that you guys are looking to get into, the mortgage brokerage industry and then the loan origination industry for these particular exams that we've been talking about. Now, what is fantastic is that folks are consuming our content and learning and they're passing, and it's awesome. And I'm so proud. I'm so proud of y'all. I'm so proud that we have this channel and we're able to reach so many folks. We've been growing by leaps and bounds. Thank you very much for subscribing. If you haven't subscribed to the channel, go through a training or two. I'll work for it, I promise. If you feel like we deserve it, and if you feel like you're getting value, then go ahead and smash that subscribe button and share. So many people are sharing these videos. It's so cool. We just hit 10,000 subscribers. We couldn't be more proud of the folks. And what's really, really cool inside of that, if you read the comments all over the place, people are passing, people are asking questions, people are engaged. It's awesome. It is awesome. I've been teaching for a long time, and there's something in my DNA that requires me to try to help people, to be in service of others. I don't know why. I don't know why I feel complete when I'm helping people. I don't understand it. It's just part of my DNA. So what my goal is to be able to help you pass. And what my kind of superpower is, if you will, is the ability to be able to take in really complicated stuff, no matter what the subject material happens to be. If I can make it a part of my DNA, then I can make it a part of yours. And so I can explain things, in ways that connect with people. So I try to use a little bit of psychology. I try to use a little bit of teaching techniques. I try to use a little bit of engagement activities. And, it's kind of funny because I don't get to see any of y'all. I get to see, your thumbnails. And I get to see your little image stuff. And that's kind of cool. But it's always nice to meet you. So we've been doing that. Lately, we've been opening up the gates to do a little bit of office hour time. And people have been booking some time with me, which is really, really cool. I have limited engagement time, but if you're looking to, have a quick consult, a private tutoring we offer, in unique circumstances, and we're about to drop a fantastic masterclass for the real estate folks, soon to be followed by a mortgage masterclass to get people to pass. What I've been able to figure out with me and my team over the years is how do we take all of this content and strip it down and remove 80% of the garbage that you will not have to worry about and focus on the 20 that you will. And so my goal is to make this happen quicker and faster and more efficiently so you can move on with this stuff. I know a lot of you are, sitting in this spiral of not being able to pass and not sure what to do. And, I don't want to see that. Obviously, that's one of the reasons we made the channel. But if you're looking to streamline this and move this ahead, we just did a corporate training for a gentleman where the executives approached me and they say, hey man, we just need your expertise. Can you come on in? This is a person that hasn't been in a classroom in 30 years, but we have $10 million in real estate deals riding on this person. Can you help them? So it was a private engagement, had to learn how they learn, how to figure out how to teach them and get them through the exam. They got through the exam. These guys made hundreds of thousands of dollars in commissions and millions to be able to make many, many more. So if you are in that situation where you are looking to cut the line and move forward, leave that in the comments. We're about to release that awesome masterclass, which basically condenses all your studies into about 6 hours. And it comes with monster quizzes and exams and stuff. And part of that is two times a month, I go live with a small group and we work on stuff. And so I'm really working folks with live engagements and everything else. Just my 2 hours of private time at corporate rates and enterprise rates are pretty expensive. So, we tried to figure out a way that we can still serve the masses, but this is for folks that are looking to cut the line and move this along. All right. So let's jump in. I want to get into some content, and the content on the table, if you will, is some mortgage loan origination activities. Now, this is part one of a part two series. The second part we're going to do next week. Matcha to you. Let me get a sip of this green gold. Oh, yeah. All right. If I got to, drone into a microphone, even though I wish I could just be in a room full of people, then I'm going to have to sip matcha. I'd be sipping some matcha in a full house too. All right. So we've got loan origination activities. Now, on your examination, this is like 25% of the questions that you're going to see in the exam. So there's a fair amount of representation here. Now, the topics that they typically cover are things like loan inquiry and application process. We want to know stuff that's going on inside of the loan application and this process. The required disclosures, the packet of disclosure paperwork, and the federal legislation, which we've been kind of working on over the last couple of iterations, is the thing. And then credit qualifications, completing the mortgage loan application, the 1003, the mysterious 1003, loan processing and underwriting, sort of what it is and what underwriters are, and what processing happens to be, closing and post-closing. So this is the process of origination. So it starts with the loan inquiry, then it goes to disclosures, then it goes to qualification of credit, then we get to the application, then we go to loan processing and underwriting, closing, and then there's this post-closing or servicing piece of the origination sector, okay? So it's like a 10,000 foot in the air understanding. Now, what is the loan inquiry and application process? So loan origination, you're taking a loan origination examination. So you ought to know what the definition of what an originator is. It's the process of creating a mortgage transaction by working with the borrower to complete the application and move through approval. So it's fairly rudimentary, right? But there's a couple of things in here that I want to clarify and I want to point out. The process of creating a mortgage. So you're taking an exam on mortgage origination. I can't tell you how many folks I meet that don't know what a mortgage is, number one, and number two, what is the mortgagor and what is the mortgagee? And they kind of twist this one up as well. Now, this ain't just newbies. This is folks that have been doing this for like 30 and 40 years. You can go into a room of experts and they still mess up who the mortgagor and who the mortgagee. They still mess it up. So, and this is no disrespect. This is just people don't know these things, and it's a little interesting for someone like me who's educator in a space to kind of go, man, wow, people don't know this, but they do this, right? Like, so that's interesting to me. I think that you are more valuable to yourself in the market if you understand what things are and you happen to have a very good sales process to boot. So a mortgage is simply a lien. It's a lien. Boom. That's it. Mort, it means death, and gage means pledge, right? So it's a death pledge. That's what mortgage means. It's a lien. It is a type of encumbrance. And the main category encumbrance are something that could burden the land. And a lien placed on your property would burden the land because you can sell your property, but you have to still be subject to the mortgage. And the mortgage, the lender has rights. Now, the lender is the mortgagee. And the borrower is the mortgagor. And the reason why folks get this one wrong on exams, and again, I don't have a copy of this examination, nor do I profess to have copies of this test. I just have a very weirdly fine-tuned targeting system when it comes to looking at content and it comes to determining what a test writer might do in a scenario. And I'm pretty good at that. So I think what we can do very well with this, with the way that we're presenting content, is that our targeting systems are heightened. And I know what I'm talking about. So I guarantee that I can't guarantee that you're going to pass, but I can guarantee that we know what we're doing. And we've done this so many times with so many thousands of people that it's just comfortable to be able to say, yeah, I would do that. So I would know who the mortgagor and the mortgagee is. That's just me telling you. And now the lender is receiving the right of the mortgage. So the mortgagee is the party receiving the mortgage. So as a borrower gives, if you will, the mortgage and gets a loan, and the lender receives the right of the mortgage lien. Remember, a mortgage is a lien, and then they are giving money to the borrower. So the lender is the mortgagee. You want to remember that for your exam. Now, during the process of initial inquiry, there's this discussion of loan options and collecting some preliminary information. We want to make sure that we're not collecting too much information and get to what we call application. Because the minute we get to an application and we collect enough information, and by the way, you want to know what the elements of an application are. Excuse me. Learn how to write, bro. What the elements are of an application. Completing the Uniform Residential Loan Application, which they sometimes call the IRLA, also known as the 1003. The 1003 was created, the loan application was created by a secondary market player known as Fannie Mae. I would want you to know what Fannie stands for, the Federal National Mortgage Association. I'm just looking over my shoulder to make sure we're good. Yeah, we're looking good. And then there's this loan submission piece, sending the completed application to the lender for processing. Now, once we go through the initial inquiry and we get an application completed, applications, or at least collecting X amount of information, will trigger federal disclosures. Now, some of the disclosures that you want to know for your exam are, first off, what are disclosures and why are they important? Well, disclosures are there to ensure this level of transparency, to inform the borrower of the key loan terms, and making sure that these things are done in a clear and conspicuous way. All those buzz phrases that I'm using, I'm doing by design, by the way. Clear and conspicuous, bait and switch advertising. Disclosures are formulated to make sure consumers are protected. That's the point of disclosure. Some people would have you believe that disclosures are there to just complicate the matter, and they're really there to make sure. Now, the truth is, I've been through countless closings, and it's a tricky packet of paper. If any of you guys have mortgages and have refinanced and know the pound of paperwork that comes with it, very seldom do people actually go through the documentation to make sure that they understand it. But there are some key elements that everybody needs to fixate on. Number one, the loan estimate. This is something that you will definitely see on real estate and mortgage examinations. The details of the loan terms, projected payments, and the estimated, most important, closing costs. That's really what the loan estimate is about. Must be delivered. This is absolutely one of those things you want to know. Must be delivered or mailed within 3 business days, and of what? Of application. So from the time of application. Now, a fine point that I want to clear up is application doesn't mean filling out the IRLA necessarily, the 1003. It typically is, right? Because there's lots of information on there. By the way, there is a sales function to taking a full loan application. And one of the reasons why loan originators kind of insist on collecting a loan application is because it's somewhat of a committal psychological play. Somebody takes time to apply and give you all of this information, the probability decreases that they might be shopping and filling out applications with 10 different lenders. So, oftentimes the loan originator, not that this is going to be on your exam, but just so you know in the field, this is why they're pushing to get the loan application. But the reality is there's 6 bits of information: name, social, property address, loan amount being sought, the income for qualification purposes. All of these things are triggering this loan disclosure. Now, loan estimate is given within 3 days of taking an application, be it on the 1003 or not. And then there's things like a special information booklet, and then a mortgage servicing disclosure, whether the lender intends on servicing the loan or transferring it. Now, there's a compliance note here. These disclosures are regulated primarily under the Real Estate Settlement Procedures Act and the Truth in Lending Act. And the loan estimate and the closing disclosure, which comes towards the end of the transaction, closing disclosure, we call it the CD, which is given to the consumer 3 days prior to, there's a couple of phrases they use. 3 days prior to consummation, that's one of the phrases. 3 days prior to settlement, or 3 days prior to closing. Consummation, by the way, is the day that a party is legally obligated on the transaction. So you'll see that phrase, consummation, be tossed around. So if you see it on examinations, don't freak. That's probably what they're looking for. Because there's a day to close, and then there could be another day that the loan is, you're legally obligated on the loan. And the next step in this process is credit qualification. So we're looking at income, assets, liabilities, et cetera, et cetera. And so why credit qualifications matter from the origination standpoint, it determines the borrower's ability to repay the mortgage. And remember, we've learned this over these trainings. There's something called the ATR rule, the ability to repay, and this kind of dovetails with the qualified mortgage, QM loan. So we do some income verification, some W-2s, pay stubs, tax returns, and self-employment documentation. We do some assets and inquiries into the bank statements, investment portfolios, and retirement accounts. Some liabilities, we look at their credit report. We look at credit card debt, car loans, student loans, et cetera, and then we look at the DTI. You definitely want to be able to understand debt to income ratio. That's what it stands for. It's a critical or crucial metric. It's calculated by dividing the total monthly debt by gross monthly income. So when we're qualifying applicants, we're not looking at net pay. We're looking at gross pay. A lower DTI increases loan approval chances. So these are called compensating factors. And so, if you have a lot of months of savings in the bank, and then you have good credit, and then you have, or let's say you have kind of credit, but you have a lot of income, you have stability, and you have length of employment. Well, those all kind of balance out the bad credit history. And then the question becomes well, why is the credit grade so bad compared to, you just have a low score? It could be credit strained. You could have maxed out on certain things. You could be a self-employed person. Depending on what you do for a living, you could see these ebbs and flows in credit crunch and strain. So that's just the probability of the differences when you're analyzing. The next thing we're looking to is borrower qualification. We're looking for stable income, a minimum of 2 years in the same line of work in terms of employment history. Just an FYI, if you're in law school, they can use the time that you're in law school as qualified employment time, believe it or not. So in certain professional studies, you go to medical school, blah, 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 then they can use that many times on applications and say, yeah, we can, what are you doing? I'm in law school, but I'm going to be out next year. Well, okay, how long have you been in law school? 3 years. So you have a length of employment history. You can say student, law student, and then, the idea is if the underwriter looks at all the other pieces, they might say fine. The appraisal ensures that the property has value to support the loan amount. Then we do something called a title search, which confirms ownership and checks for any liens on the property. Remember, a mortgage is a type of lien. And then we have insurance products, which verify property coverage requirements, etc. Well, the big takeaway here is that both the borrower and the property must meet the standards of the lender to proceed. Now, many times, and we've talked about this before in other sessions, that the standards that the lender utilizes is coming from not the lender, but somebody that the lender can later sell the loan to on a secondary market like Fannie Mae or Freddie Mac, the Federal National Mortgage Association, or the Federal Home Loan Mortgage Corporation. And so that's, they're the folks that come up with guidelines, and they're the secondary market players to purchase these loans. All right, let's take a look at a question or two, and let's see how we do. All right, so question. During the loan origination process, what is one of the primary goals when interacting with the borrower during the initial inquiry? Letter A, to determine the borrower's interest rate. Letter B, to calculate the borrower's debt to income ratio before application. Letter C, to collect enough preliminary information to identify suitable loan options. Letter D, to finalize the loan agreement and prepare for closing. During the loan origination process, what is one of the primary goals when interacting with the borrower during the initial inquiry? And the answer? Letter C, to collect enough preliminary information to identify suitable loan options. So this is the initial inquiry stage. This is before we're going to application. So really the question, it's just this is more of a conversational back and forth. And the loan originator has to be really cautious about, things like gathering too much information, which could trigger federal disclosure, like those 6 pieces of information that make up an application. So we want to be careful, but we also want to be conversational, right? So there has to be enough information exchanged. Now, this is always interesting, and I'm just going to throw this out there. Many times consumers will simply ask a loan officer, hey, what are your rates? And the truth is, loan officers really shouldn't be quoting rates necessarily unless they get a better picture of what the consumer is. I mean, usually what they'll do is they'll say, all things being perfect and, strong application, strong income, strong credit, blah, 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 we can do rates around here. But really the consumer is not doing a thorough enough job in their inquiry. This consumer needs to ask, what are the APRs associated with these rates? So, currently what are you offering a 30-year fixed mortgage for in terms of rate? And then what is the APR associated with that 30-year mortgage for, a prime borrower? And so the APRs, how we shop bank A to bank B, is if the rates are the same, and if you call up 10 banks, their rates are going to be very, very close, if not all spot on. So then how do you know which bank to go with? A lot of consumers just go, I just like this person better, or this is the first person I called. But if you just simply ask the extra question of what are the APRs connected to these rates, the APR as required by the Truth in Lending Act is going to identify the true cost of the credit. So you could be like, 6.75% fixed for 30 years, but the APR could be 6.999. And so now we take that 6.999 and we call up the next bank, Bank B, and we say, hey, what are you offering? They're going to say, hey, we're offering 6.75. And you're like, wow, that's just like the other bank. Well, what are the APRs? They might say I'm making this up, 872. So the second bank, their total cost of credit is a little bit less expensive than the other lender A. And that's how consumers shop, and that's a requirement by the Truth in Lending Act or Regulation Z. Let's keep going. Which of the following statements best describes the purpose of the loan estimate, the LE disclosure? Letter A, to estimate the appraised value of the property so that the borrower knows how much they can finance. Letter B, to provide a detailed account of the final loan terms and costs associated with the mortgage transaction. Letter C, to inform the borrower about potential changes in interest rates after closing. Letter D, to provide an estimate of loan terms, projected payments, and closing costs. Which of the following statements best describes the purpose of the loan estimate? Give you a second. And the answer? Boom. Letter D, to provide an estimate of the loan terms, projected payments, and closing costs. And one of the reasons that, look at letter B here, to provide a detailed account of the final loan terms and costs associated with the mortgage transaction. That's the CD, closing disclosure. To estimate the appraised value of the property so the borrower knows how much, that's an appraisal. And then C, to inform the borrower about potential changes in the interest rate after closing. That is like nothing unless it's an adjustable rate mortgage disclosure. So this could be a CHARM disclosure, CHARM. Consumer Handbook on Adjustable Rate Mortgages, and it could be in a Truth in Lending disclosure if the interest rate is adjustable, right? So really the purpose is to provide an estimate of the loan terms, projected payments, and closing costs. Now the letter D here is the answer. Letter B, the closing disclosure. Those two documents do go hand in hand, and you want to know those disclosures? Absolutely. Things like timing and what's covered in them, when to disclose them, etc. You will see those, I'm pretty sure, on an exam. All right, the next question. When evaluating credit qualifications, which factor is most likely to directly affect a borrower's debt-to-income ratio, or DTI? Letter A, monthly obligations compared to net monthly income. Letter B, the borrower's employment duration in the same industry. Letter C, monthly obligations compared to gross monthly income. Letter D, the type of mortgage loan the borrower is applying for. When evaluating credit qualifications, which factor is most likely to directly affect a borrower's debt-to-income ratio? I'll give you a few seconds. That means I'm sipping. And the answer? Letter C, monthly obligations compared to gross monthly income. Now, look at this. Monthly obligations compared to net monthly income. So some students will have taken A. So A is a very popular wrong answer. And it's just the difference between gross monthly income and net. Remember, back to the beginning of the discussion, that qualifications are determined based off of gross income, not net. So we look at the gross income versus the net. So we don't go to net. And so that's why A is wrong. It's very subtle, but it catches a lot of folks on exams. So you want to very carefully read answers equally as much as fishing for the answer. So you need to reading the questions. You see a lot of students focus a lot more on the question. And the question's important, but the answers are more important in my professional opinion. I've been doing this a while, and I can tell you that people miss these little things, and then they jump to conclusions, they pick the wrong answer, and then they're like, man, what happened? I thought I knew this stuff. So it's really, many times what you see is it's not always the theory. It's just the connection points, the nexus points in understanding where things connect and interconnect. And then it could be the subtleties here. And this is the exam subtleties of like, wow, I read that, but I missed that. Right. So there's something known as a reticular activation system in the brain. And what ends up happening, it's really a fascinating thing. Sometimes when you're looking for something, it could be sitting in front of your face and you completely can't see it. And then other reasons, now you're being very hyper aware. So you're looking to be vigilant to be able to get through the questions because you're under timed circumstances. And many times that timed circumstances triggering a response that's counterintuitive to what you're actually trying to do and focus. So that's why it really helps to be able to focus a lot more and do some practice exams and practice and work and kind of think through these questions. Maybe even just look at the answers. All right. Cool. We have just gone through that entire section. And again, that is the roughly one part of the 25% of this examination. And it's the mortgage loan origination activities. If you go to the NMLS and you look up the outline, you will see that section of the exam. So this is just, again, this was a fast, quick couple of things, couple thoughts that I think you need to know for this examination. And these are the topics that I would look to. Go back and rewatch this, and you'll see what I'm talking about under those particular issues. So go right back after we do something like this, and then just watch through that. Make sure you understand some of the fine points, and I gave you some nuggets on the inside of things that you might want to know additionally to what's going on. All right, so that was our exam breakdown today for Wednesday, the 2nd of April. Man, things are going quick. I hope you guys are working hard and studying. This is a bit of a challenging exam in the fact that if you do fail, you have to wait for time to pass to go and do it. Now, that time could be productive, and in many instances, that time is counterproductive. And remember, if the third failed attempt of this examination, you have to wait for 6 months before you can retest. 30 days in between each up to the third failed attempt. And then the third failed attempt, you've got to wait for 6 months. So it's a bit of a challenge, right? Because, you know, the markets are moving. If you got to wait 6 months because you failed it 3 times. So now that you understand what's at stake, then, you know, the other question is, well, you know, are there deals? Do you want to be, you know, are you learning about the industry? Are you learning about the market? I mean, there's plenty of things you can be doing while you're waiting, but you want to get through this examination, right? And there's a lot of folks that get this license and they are getting paid referral fees. They could be financial advisors in some states and they have to get the license. So they're completely disconnected. They don't intend on originating mortgage loans, but they're getting paid compensation and they might have to do this. So we find, and we get hired out to do a lot of corporate style training here. I'm federally licensed to be able to offer the curriculum. And in this channel, we're just working on exam prep, right? So it's not the 20-hour course by any stretch. But the truth is, what you find and what I've found over the years is that people are failing because they're just not taught properly. And they're not taught properly these concepts because these are really weird, obtuse concepts. So you really need a technician to be able to show you how to do this right. I don't want to bash, but I'm gonna. I've seen a ton of the material that's out there, and a lot of it stinks. A lot of it's worthless. Now, no, in the defense of some of these instructors, the curriculum is quite dry, and it's just the complicated things. We also have to very carefully cite sources, and we need to make sure that the stuff is factually accurate as we're presenting it for approval. So I understand completely because the stuff is kind of boring to look at, but that doesn't mean that it's a bit of an artist when it comes down to this couldn't breathe life into it. And sort of that's what I feel is missing in many of the experiences that I come across when I see other people talking about their instructors and stuff like that. Anyway, if that's one of you, leave a message in the comments. And if there's anything we can do to help you, topics or anything like that, go ahead and leave them in the comments. If you haven't subscribed, if you found our content valuable, please consider doing that. Our channel brings in a lot of fresh visitors and many don't subscribe, and we would love to see you come and hang out. We are putting so much cool content together over and over. It's not just about exam prep. My belief is the most valuable professional is someone that actually understands this stuff. It's not just selling, right? Like if you know this stuff and you understand it quite well, then you can explain it, right? And so my job is to make sure that I can inspire people to understand it, to be able to communicate it. You're going to be deadly and awesome at this business if you understand it well, okay? And it just doesn't come. Think about the years of time that you are wasting trying to relearn this stuff. So learn it, and then just move on. All right. If there's anything we can do, let us know. Thanks again for checking us out. Thanks for subscribing. We really appreciate it. I hope the time you spent with me yields you some success. Good luck with your studies and good luck on your tests. Take it easy. We will see you on Monday for the real estate professionals. Thank you again. And check out our masterclasses. We're going to be dropping links pretty soon. It's going to be a great one. If you know someone looking to get their real estate licenses, brokers, or salespersons in any state, anywhere, all over the place, our masterclass is going to be the trick to pass that national examination, to crush it. And we've condensed everything down instead of 80 to 100 hours of additional study time into like just 6 hours and some exams. And it is really, really awesome. Anyway, I digress. I look forward to seeing you in the next installment of the exam breakdown. That's Monday and then Wednesdays. And then we will see you soon. And thanks again for helping us get to 10,000 subscribers. Looking forward to get to 20. See you soon. Peace.